Joe, this is our game day, and here we go. We're getting ready for this decision. What do you think? 75 basis points, and then?
Well, you know, Becky, I'm just chuckling a little bit. I know how important it is, but somebody talks about the Fed 30 times a day on CNBC. And I think there are just too many people spending too much time thinking about too many things that don't matter that much relative to what's going on. I think Powell, when he was at Sun Valley, had never been clearer. He spoke for 5 minutes and he said, we're going to 2%. We're not fooling around with that. And he said the reason why we can't play around with this is because if inflation lasts too long, then inflation gets embedded in the economy more on a long-term basis, and that's a real problem.
Although the market didn't seem to take heed of that message. It was a clear message that was coming out. The market, though, has moved pretty precipitously since then, and it seems that maybe they were expecting the Fed would lose its resolve.
I don't know how anybody can think that.
I don't either.
I'm never going to challenge the market.
Yeah, I don't either.
The market's not wrong. But the guy could not have been clearer. And then even afterwards, well, how do you interpret this? The guy said, we're going to go to 2% on inflation. We're going to continue to raise rates until we get there. And if we don't do that, the problems we're going to have longer term are much more significant than what we've got now. So, and I don't know if the market's worried about the 75 basis points, obviously what everybody expects, but I think they probably have a little bit more concern in terms of what the terminal rate's going to be long term. If they come in and say the terminal rate's not going to go to 4.75 or 5%, you know, the market's probably not going to respond positively to that. But regardless of what they do with the 75 basis points, whatever his comments are afterwards is what people are going to pay attention to.
The economy is kind of scary, Joe. There's places where you can look. Sternlicht was talking about it, FedEx guy talking about it. So, you know, the Fed is saying this stuff, and on the one hand, you worry they don't have the nerve to go through with it, and we get back in the 70s, stop, start. And then on the other hand, you worry they have the nerve and they may miss data dependency and not take the cue from what they should do. So I don't.
Joe, again, I appreciate that concern and I appreciate being in the marketplace. The guy said point blank.
Well, that might be wrong.
But if he's wrong, he's looking at the data. He's not predicting what he's going to do a month or 2 months from now. He's going to adjust and he's going to change. He's going to adapt and adjust. So everything you're saying is accurate. All those things could happen. But he's pretty clear. I wouldn't bet. You know what? When the rates are low or the rates are going down, everybody says, well, don't fight the Fed. Well, now rates are going up. Don't fight the Fed.
The one thing that Barry Sternlicht said when he was here is that the Fed is looking at outdated data. That if you are looking at the numbers he sees every day as a CEO, that other CEOs see every day, his concern is they're reacting to outdated data. As a result, it's far more likely that they will overshoot and that they will push us into a deeper recession.
Well, I think that's a legitimate concern. I thought always, my entire career on Wall Street, I always thought that the Fed's data was probably as good as anybody's on the planet, and it was probably updated. Now, if that's not the case, and looking at outdated data, well, how outdated can it be? A month? But still, no, that could be an issue, but I wouldn't worry about that either.
There's more cash sitting on the sidelines than there has been in a very long time.
Yep.
People aren't getting kind of drawn in by any of the drops, thinking that, okay, there's more room to come down. What do you see from the retail investor perspective, from the day trader side? I
literally see exactly what you're saying. I think people are on the sideline. I think other than the day where I forget the date, with the CPI number and market went down 4.3%, that was the second largest inflow to equities that we had all year. But other than that, it's not that the retail investor is selling. They're just not buying. They're not putting money to work for the most part. And I think they are looking at clearly what's going on. Again, don't fight the Fed. If rates are going up and there are a million other problems going on in the world, you know, things don't look good as far as the marketplace goes. And I think the retail investor, frankly, is as wise as they have ever been in terms of how they play that.
In terms of the numbers that you're watching next, obviously we listen for the tone in this conversation with Jay Powell, the question and answer period that comes out. What else do you watch? Is it mortgages? Is it the jobs picture?
Well, I think
is it inflation?
You got to watch the jobs. I think you want to have a good understanding of what's going on with housing. I think, you know, the biggest thing when you said, you know, the big play today is the Fed, I certainly understand that. I think the big play today is what Putin said. The first time he has spoken in over a year publicly. And the guy's got an ego the size of this building, and he's not fooling around, and he's really unhappy with the West. So he's going to mobilize more troops now, number one. And when he talks about, you know, there is no limit that they won't go to be able to support what they're trying to do, the threat of a nuclear issue starts to come up. I think that's one of the bigger issues that's kind of going on in the world.
I will admit, I'm surprised. You see the Dow futures up 165 points this morning. with walking into that news. I don't know if that's an example of how far the market's fallen in the last 2 weeks, or if that's a kind of something of people saying, well, look, we've gotten so used to his saber rattling.
You had said before that, the market hasn't responded the way we think the market would be responding. But if you look at it over time, where we were wasn't that long ago, we were 4,300 in the S&P. Now we're at 3830, something along those lines. I mean, that's about a 10% drop. And I'd be interested to see what happens today. But you look at what's going on in the world. I mean, God, we got issues with Russia. We got issues with China. We got a war going on. And poor Europe's going through what's going to be the most significant negative impact that they've had in their economy and their markets in decades. None of that stuff is good.